Welcome, ladies and gentlemen, to another episode of the Trump Tax Code Podcast. This is the Money Pyramid. I'm your humble, gracious host, Jason Money Miller, and I'm here to get into some very key details for you. Now, first things first, when people hear the word pyramid, they think, oh my God, this is some kind of pyramid scheme. But listen, ladies and gentlemen, we're going to give you the basic understanding of why there is a pyramid on every dollar bill. Let's get into the fundamentals. Now, we're going to be talking about building a legacy, understanding generational wealth. And for you to do that, ladies and gentlemen, you have to understand the strategies for financial literacy as well as trust and tax optimization. That's exactly what we're going to get into today. Now, the Trump Tax Code Podcast, want to make sure we break it down into simple steps, 6 simple areas that we're going to get into and cover. So you're going to get into more detail. First things first is the introduction to generational wealth. Generational wealth is a large concept. We're going to break it down into very simple, understandable tools in 2 primary areas for you to be able to grasp and understand. Secondly, leveraging trust and life insurance. What do those vehicles look like and how do you actually apply them? Third, understanding IRS tax code 7702. Most people don't even understand what that is, don't know what that is because they've never heard about it. We're going to help you to understand what that is, ladies and gentlemen. Assets versus liabilities. Again, it's very important to understand your assets versus your liability in structuring a solid financial future. For that to happen, you have to have the financial literacy and education. And of course, we're going to have a call to action. So let's get into the information today. Introduction to generational wealth. Now, generational wealth, as we mentioned, is a very, very, very big concept. But for you to understand the beginnings of generational wealth, you have to understand the tax laws on the books. But for us to get into that, as those are 2 big concepts within themselves, we're going to break it down to 2 things. A, the importance of building wealth that lasts across generations. And B, the role of financial education in achieving your long-term financial security. Let's take a deeper dive together. Now, leveraging trust and life insurance. Understanding that trust serves as the vehicle for holding and managing assets, ensuring that they're passed on to future generations. Structuring assets within corporations held by a trust can also provide legal protections and tax advantages. Now, this is a key thing for you to understand the difference between a will and a trust. Most people believe that if you have a will, my information is safe. Well, I'll put it to you in layman terms, as someone told me. If you have a will and that's all you have, that means A, your business will be in the streets. B, your property will be in probate court. C, everybody or any taxpayer will come to collect everything that they can, and there's a large chance your family will not be able to get that information, that generational wealth passed on. The difference is with a trust, again, as it serves as the vehicle for holding and managing those assets, ensuring that they're passed on to future generations. For business owners, structuring assets within corporations held by a trust can provide legal protection and tax advantages. Now, we're going to get into that in a bit more details, but first we're going to talk about the role of life insurance. Now, life insurance provides significant death benefit that can replenish the trust, ensuring its longevity. Now, that's all based on the structuring of life insurance. Now, when most people hear life insurance, they think it's for the dead. But ladies and gentlemen, life insurance is for the living. Listen, you buy insurance for your car to use it while you're alive. You buy your insurance on your phone to use it while your phone is broken. The only time you get a chance to maximize it is at the end of the phone, but you use it for that time. The same thing for your life insurance. Now, this financial tool allows for seamless transfer of wealth without incurring any immediate tax liabilities. Again, the benefits of life insurance, as I explained to you in layman terms, not only does it provide significant death benefit that can replenish the trust, so if you have to give or pay out of the trust, your life insurance can ensure that the trust is rejuvenated or it's replenished with whatever financial resources. Additionally, the life insurance, the financial tool, allows for seamless transfers of wealth without incurring any immediate taxation. Now, We all know taxes, but like a friend of mine told me, and mentor of mine told me, Ed Slot, I love taxes. We all have to pay them, but with taxes, less is always more. Now let's look at the third step. That is creating a robust strategy. Now, again, combining a trust and life insurance helps to create a comprehensive generational wealth strategy accessible to everyone. Pay attention, ladies and gentlemen. This is not just for the ultra rich. This is just not for the 1%. This is not just for President Donald Trump. This is information that's available to everyone. The sad thing for me is that while our President-elect Donald Trump was knowledgeable of the tax laws and was in a position to help us understand these laws, we did not have the opportunity to learn about how we can utilize these tools for our families to build a sustained wealth across generations, to continue or to change the statistics that wealth dissipates within 2 to 3 years. As we've seen, we had a 4-year election, and a lot of the people who gained that wealth within the beginning lost it over the Biden administration because of taxation and inflation. And inflation is taxation without legislation. Let's face it. So let's look at the best strategy that we can to protect our dollar, ladies and gentlemen, and that's combining a trust and a life insurance, as it creates a comprehensive generational wealth strategies that's accessible to everyone. So you do not need to be ultra wealthy to get this information. You do not need to be ultra wealthy to have access to these tools. All you need to do is schedule an appointment with a member of our team. By utilizing these tools, for families can build and sustain wealth across generations, countering the statistics that generational wealth dies or dissipates within 2 to 3 years. Now that's an alarming statistic. Now I give you an even more alarming statistic: the tax codes that you did not know. Did you know that your 401k was a tax code? Were you aware that your 403b was a tax code? Were you aware that your 457 and your TSP, even your 501c3s, are tax codes? This is how money or your income or revenue are being taxed. Now, the difference is with these, only one there says 7702. And the only one there that maximizes the rule of 72 is tax code 7702. And let me explain that to you in a bit more detail so you understand the understandings or the inner workings of tax code 7702. Now, just as an introduction to tax code 7702, understanding that the IRS tax code provides the guidelines, ladies and gentlemen, for insurance and annuities, allowing for tax-free savings and wealth transfer across generations. Now, pay attention. We just spoke about previously having a trust and a life insurance being the best comprehensive vehicle. Now we understand that this tax code 7702 gives us the guidelines for allowing our insurance and our annuity products to be combined for tax-free savings and transfers of wealth across generations. What are the advantages of that? Pay attention, because when you recognize these benefits, by utilizing this code, which enables individuals, anyone, to grow their wealth without incurring immediate tax liabilities, making it a very powerful tool for financial planning. So again, starting with your trust, adding your life insurance tools, structuring it within tax code 7702, you can now take the tax advantages of not being taxed immediately on your funds as you're saving them. So let me go over each one again. The introduction to tax code 7702. A. Understanding that the IRS tax code 7702 provides the guidelines for life insurance and annuities, allowing for tax-free savings and wealth transfers across generations. Secondly, the advantages of tax code 7702. See, when you leverage tax code 7702 and you utilize this code, it enables you, the individual, to grow your wealth without incurring any immediate tax liabilities. So again, it will make it one of the most powerful financial tools for your financial planning. Now let's look at the third aspect, which is very important because we just spoke about a 401k a while ago. See, a 401k is like an IOU to Uncle Sam, who's not really your uncle. So listen up. You can't compete with facts. The biggest risk to your retirement plan is a tax rate risk. What do I really mean? It's very simple. Over time, the taxes will increase. So, as you saw by the end of 2024, the last administration, our debt ceiling was over 30 plus trillion. Now, the point I'm giving to you by helping you to understand the differences between the 401k, which is a tax deferred, versus a tax code 7702, which is a tax never. See, there's tax now, tax later, tax never. Now, your tax now accounts are your bank accounts. Your tax later accounts are your 401ks. Now, the difference between tax code 7702 from a 401k, noting that while your 401k may hold you from be taxed later, when you do withdraw your money, there's a great chance that you will be taxed upon that time. However, tax code 7702 allows for tax-free access to funds, positioning it as the more favorable option for long-term wealth accumulation. Now, again, ladies and gentlemen, let's pay attention to that. As I said, a 401k is an IOU to Uncle Sam that's not really your uncle. The biggest risk to your retirement is a tax rate risk. So retirement taxes is going to increase. Now, if you don't want to deal with these taxes and you don't want to have these tax liabilities, the best vehicle for you to use to save your money, investing your money in yourself, is by establishing a properly structured tax code 7702 protection plan for your family. Why? It allows you to incorporate a trust and your life insurance. It serves the guidelines for you to then include your life insurance and your annuity vehicles tools to be able to generate wealth, to be able to transfer them across generations. It provides the tax advantages of being able to occur tax-free without any immediate tax liabilities. It also provides the added benefit versus a 401k, which whenever you touch it, you will be taxed, especially if you're before 59 and a half or 72 after 72. With 7702, it is not taxed and you can access it anytime. So there's more access to it. Now, I mentioned again, we have to address the tax rate risk and inflation because that, again, is by far the biggest risk to your retirement plan. Now, acknowledging the implications of the tax rate risk and inflation on retirement plans, as these factors can erode away at your savings. You see, Tax Code 7702 offers a strategy to mitigate these risks, providing tax efficient way to manage your wealth. So again, if you're thinking about just putting it in mutual funds or stocks, hey, that's one way to look at it. It might not provide the same kind of guarantees or benefits because those are tied directly to the stock market. I know I'm talking a little bit deeper than what I'm training on, but I want to give you an understanding of what are the differences. So let's dig a little bit deeper into this. This is the money pyramid, okay? And I want you to understand the money pyramid really for what it is. You see, the poor, the poor have been programmed to focus on the money. And in focusing on the money, that money goes directly into expenses. They go buy stuff they don't need. They go spend it on jewelry they don't need to have, on Jordans and all this other stuff. Now let's look at the middle class, the backbone of the American economy. The middle class spends most of their money gaining an income, and that income goes back into liabilities. Now, those liabilities are like the mortgage that they pay for, or the car payment, and the credit cards, and the student loan debts, and the FAFSAs, and all these things. These are the liabilities that are incurred by the middle class. Now, what do the rich do at the bottom of the pyramid? The rich base their time working for assets. So they spend their time working for assets, so the assets generate income. The assets generate the income that pays for their liabilities and their expenses. So they're not working for money, they're working for assets, and assets provide income. So I'm going to break this down in a little bit more deeper perspective. Assets and liability, simplified. Assets generate cash flow. Assets contribute to your wealth creation. And examples like stocks and real estate, like I talked about, are variations of assets. Life insurance is one of those assets as well. It can appreciate over time. The right kind of life insurance policies, as we've talked about, versus liabilities. Liabilities does not generate you an income. They drain your financial resources. So if you just have a car payment, you're just paying your cell phone bill, you're just buying money on food, you're just spending money for trips or Ubers, or you're just spending money unnecessarily, that's draining your resources. Those are liabilities, and understanding the differences are really crucial in making effective financial planning. See, this is a breakdown of what that pyramid looks like in all three phases, as I talked about. The poor gets the job and they work for the salary over here on the left. But as you see, that money goes directly into taking care of their taxes, their rent, their food, their transportation, and they have to buy clothes. These are all necessary expenses. They're all expenses. We all have them, but these are all expenses. So because the poor has been programmed to go for the money, they're programmed to go for the expenses. Now, the middle class in the middle here, they have the job and they get the salary from that income. But you see, there's a little twist with theirs. They have those car payments like we talked about. They have those credit cards like we mentioned. They have those school loans from going to college, and they have those mortgages. So after paying those primaries, then they get into the other personal payments and the personal credit cards, and they get into the taxes and everything that they have to pay. These are liabilities and expenses. Now, let's look at the other way around on the far right for the rich. As you see there, the column that the money starts from is under the assets. And that could be their stocks, that could be bonds, that could be insurance, that could be policies, that could be all the multifamily or income producing real estate assets. But those assets provide the residual income, the dividends, the interest, and the royalties. Those royalties takes care of their expenses, their mortgages, and also allows them the luxuries of a tax-free home and transportation and credit cards being the way you see it. Why is that? Because they're doing it the way they're doing it. Now, when you work for your money, you're going to always have to work for your money. When your money is working for you, as you see, as the rich do it, they don't have to work for it. I'll tell you this, and I quote, "The only thing better than having your money work for you is having an AI work for you." Now, the money pyramid simplified again. The poor focusing on expenses, the middle class on income and liabilities. But on the bottom, the rich get their assets and the assets to generate income. It's that very simple. So what do you want to do? What do you want to be? Where do you see yourself in the scope of these things? And that's where the financial literacy and education comes in to this part of the process. See, first, ladies and gentlemen, we have to focus on the strengths. And what do we mean by that? This is the stow. You know, you have to be good stewards, so you have to stoicism. Now, growing awareness of the importance of financial literacy among individuals, leading to increased demand for educational resources. See, that is where your first strength begins. Empowering yourself with the information from training like this, from scheduling a free financial lifestyle strategy, from booking a free one-on-one strategy call so you can get better understanding of this information and better more advanced information. Why is that? Because then more individuals will now want to learn to increase the demand to change the dynamics. And why is that important, ladies and gentlemen, is we have to address our weaknesses. And in this case, the number one weakness we have to address is a lack of comprehensive financial education in schools, resulting in the gap in essential skills like budgeting and understanding the tax implications that we see in these current generation of students. See, ladies and gentlemen, the threat there is that the raising of tax rates and inflation, which will undermine the financial security of the individuals who are not well financially versed. Yes, that is why it's a very big issue. That is why we have to now strengthen ourselves first by growing our own awareness, empowering ourselves with the financial literacy, and ensuring that among others and getting that information out, empowering ourselves. Then we can start to address some of the weaknesses. And why is that? If you believe the children are the future, there's no way we cannot focus on the lack of comprehensive education and financial literacy for our students to then bridge that gap. Why? A generation that is children or a population that is under or do not understand the tax laws will always be overtaxed. And as I explained, inflation is taxation without legislation. So as rising taxes and inflation, which can undermine the financial security of individuals who are not well financially versed, this is why we need to pay attention to these things, because why? It will help us to create the opportunities that we see here of programs like these, implementing programs to be able to leverage the advantages in tools such as IRS Tax Code 7702 to enhance personal financial education and wealth building strategies. And that is our goal here at the Leadership Institute for Excellence, is to help you to understand those wealth building strategies. So with the Trump Tax Code Podcast, we want to take the time to give you the keys on the 35 benefits to Tax Code 7702. And I want to write them down. I hope you write them down because I want to say them out loud for you. 1, death benefits are tax-free. 2, cash value withdrawals are tax-free. 3, tax-free growth. 4, principal is guaranteed. 5, compounded interest. 6, lock in the gains. 7, could be used for an education tax-free. 8, can be used for emergency because it is highly liquid. 9, no 55 and a half rule or 70 and a half rule. Number 10, 1035 exchange, free of charge and penalties. Number 11, it outpaces inflation by an average of 3 times, leaving inflation, 3 times the level of inflation, I should say. Automatic bill pay, that was number 12. Number 13, pay tax-free retirement. This is a tax-free retirement. Number 14, avoids probate. Number 15, diversifies in the global market. Number 16, infinite banking you become your own bank. Ladies and gentlemen, this is a Trump Tax Code Podcast. We're giving you the game here. This is the money roads. This is the money pyramid that we're breaking down here. And we're giving you these applicable steps that you can use to apply to expand your own net worth. Now, benefit number 17, flexible payment options. Number 18, not considered an asset favorable to client. Number 19, easy accessibility to your funds. Number 20, terminal illness rider, meaning that you have terminal cure in it. Number 21, long-term care rider, means that you have long-term care benefits as well. 22, increased death benefit policy payout to the beneficiaries on both the death benefit and the cash value. So there's an increased amount that's paid out to your beneficiaries and also in the cash value. Why? Because your money is growing tax-free. It's compounding in interest. Number 23, protection from lawsuits. Number 24, protection from creditors. Number 25, protections from judgments. Number 26, protection from tax liens. Number 27, protection from bankruptcies. Number 28, considers as an asset when purchasing a home. So this is considered an asset when you're purchasing a home. Number 29 is a permanent insurance that you can never outlive. Number 30 is a personal pension plan like distributions where you can get income paying you going into your years that you can never outlive. Number 31, unlimited contributions, no minimum amount. So you can contribute as much as you desire and it will be compounding uninterrupted with compounded interest for you the entire time. Number 32, no market risk at all. This is a guaranteed account. Number 33, no impact on your Social Security income. So this is income you can establish for yourself in your life insurance, millions of dollars, and still be able to have your Social Security income. No hidden fees, ladies and gentlemen. There's absolutely no hidden fees, and there are no broker fees associated with tax code 7702, ladies and gentlemen. The call to action today is very, very, very simple. Take action immediately. Don't allow or wait until tomorrow to start implementing financial strategies for yourself to secure your future. Schedule a call right now. Email us, lifeai@usa.com, lifeai@usa.com. Email us or me. Next, you can actually access to everyone. Make it accessible to everyone. Building generational wealth is not just for the ultra rich. These are strategies available to everyone. This is why it's important that you take action today. Emphasizing that financial literacy by understanding personal finances, understanding the tax laws. This is crucial, ladies and gentlemen, to making informed decisions and avoiding unnecessary taxation. Now, let's think of taxes for a second. As I said, taxes, we all got to pay them. But as I understand it, less is always more. And as I'm showing you here, I'm not telling you not to pay taxes. I'm showing you the tax laws on the books and help you understand how you can put that cash, that money into your family to transfer it from one generation to the next generation tax-free versus you having to spend your money on taxes on your income, then you spend taxes on your clothes, then you spend taxes on your food, then you spend taxes on your car, then you spend taxes on your vacation, and you spend taxes on your phones, and you spend taxes on your subscriptions, and you spend taxes everywhere. So your dollar is taxed 10, 20, 30 times. Why? Because of the lack of understanding of personal finance, the tax laws, which is crucial to making informed decisions to avoid unnecessary taxation. So again, strategic planning, ladies and gentlemen, is absolutely key. Develop a clear plan that incorporates your assets and your liabilities to ensure that your wealth is not passed on to your generation effortlessly. Now, the number one thing why that's important, guys, is to really discounter the statistics. Because right now, the statistics shows within 2 to 3 years, if you are the breadwinner for your family, if you are the person who's doing the work to bring home the bacon, you're going out 9 to 5, you're making work. If you are a business owner, and if you don't earn any cash flow, the business doesn't go. You are that breadwinner. Think about it. What happens in 2 to 3 years if you are no longer able to earn an income? What happens to your family if you are no longer here? That's the worst case scenario. Let's take a step back. What happens if you just become terminally ill and you're not able to work, but you're still alive? What if you become physically disabled, but you are alive? This is why the power of these financial tools are available, ladies and gentlemen. Again, ladies and gentlemen, I encourage you to schedule a free retirement strategy one-on-one today. We can go over retirement planning. We could talk about the cash value accumulation. We could talk about asset protection, infinite banking, and tax-free income strategies. What does the rich do with money? This is what we will be teaching you, ladies and gentlemen. That is my time. Again, this has been brought to you by the Leadership Institute for Excellence. My name is Jason Llewellyn Miller, Head of Research and Development. God bless, God's best, and as always, Godspeed. I thank you for scheduling. Please click the link below to learn more. You can visit our blog, the Life Hacks blog, where we have more information in the Trump Tax Code website, where we get into a lot more resources that's also available. We also have our early childhood financial literacy program that we're rolling out for students between the ages of 4 and 12 years old, teaching the fundamentals from math, understanding the value of money, counting, spending, and even blockchain technology. So we're really taking the time to empower the next generation with this knowledge as we're taking the time now to empower you. So again, ladies and gentlemen, that is my time. Until we see each other again, I look forward to seeing you at our next meeting, at the next seminar, or in our next one-on-one session. Email me directly at lifeai@usa.com.